online. All right, everybody, we are back. What we did here for the live students, not that you aren't live at home, but the people who are here face to face, is we just took a quiz over the normal account balances. Okay, so I'm asking you if it's a normal debit balance account, thus if it increases with a debit, decreases with a credit, or if it's a normal credit balance account, thus it increases with a credit and decreases with a debit. So let's go through these answers real quick. If you want at home, go ahead and pause real quick and just do this quiz on your own, and then you can come back and push play again and go over the answers. I'd encourage you to do that. Okay, unearned revenue, what is that? Now I'm going to put C and D for debit and credit. Okay, guys? C and D for debit and credit. Or will that mess you up? Okay, well, I'll do it both ways. Okay? Unearned revenue is a credit balance account. Salary expense is a debit balance account. Accounts payable is a credit balance account. Attorney's fee earned is what? Credit. Automobiles is a debit balance account, as is cash. Consulting revenue is a credit balance account. Cooling expense, all expenses are debit balance accounts. Earned revenue, revenues are credit balance accounts. Equipment is a debit balance account. All assets are debit balance. Income tax payable, what do you think? Credit. Inventory is a debit balance account. Notes payable is a credit balance account. Notes receivable is a debit balance account. Owner's withdrawals, sometimes that's a sticky one for people. What is that? Debit balance account. Prepaid insurance is an asset. That is a debit balance account. Rent expense is a debit balance account. Wages expense, all expenses are debit balance accounts. Capital, credit balance account. And receivable is an asset with a debit balance. Okay? We'll go over the A and B pretty later on. I don't want to confuse the people at home. Okay? How many people here got a 19 or 20 out of? Okay, very, very good. Okay? You really should be aiming for 100% on these. Okay? Okay? Now, if you got like 14 out of 20 right, I don't know if anybody did, but if you got 14 out of 20 right, you might be thinking, hey, that's not too bad. No, it's not real good, because think about it. It's 50-50, right? A monkey flipping a coin should get what? 10 out of 20, right? So if you got 14 out of 20, you did 4 better than the monkey, right? I don't mean to be mean, but that sounded a little bit more mean than I wanted it to. But seriously, you should get 10 out of 20 just by guessing. So 14 out of 20, it's not where you want to be, okay? You really want to aim for 19, or better yet, for 20. How many people have made their flashcards? Okay, raise your hands. Okay, a lot more. Very, very good. Very, very good. You folks at home do those flashcards as well. Okay? Now, any questions over that here? Lauren?
For the number 4, that was attorney fees earned. Unless it says cash, like if it says earned, does that mean you should assume it's revenue? And then
yes, if it says
cash,
attorney fees earned or consulting fees earned or landscaping fees earned, that is a revenue account, and all revenues are credit balance. Okay? Good. Anything else? Okay, let's go to the homework real quick. Actually, while we're on this, we'll do them a little bit out of order. Let's go ahead and do exercise 2.1 while we are on this subject of credits and debits. Okay, now I'm going to go ahead and just put all of the answers up here, and we can kind of talk about them, all right? What they wanted us to do is they gave us some accounts, and they wanted us to state what type of account it was, And then how do you increase the account? And then they ask the normal balance of the account. Now, if you notice, the answers to these two columns are always the same, are they not? And I think that's their way of emphasizing that, excuse me, the normal balance of account is, in fact, the way that you make that account increase. Okay? So something like this, I want this to start to be totally secondhand for doing it. I want you to be able to just whip through one of these real quick, okay? Because once again, if this sort of a question, if you're struggling with it, this class is going to be real difficult. I want to get you to the point where something like this is just easy points, okay? All right, let's keep that up on the screen a little bit longer for folks at home. Okay. All right. Any questions on any of those guys? Any questions? All right. Let's go to Quick Study 2.8. Now, Quick Study 2.8 was another one in regards to what financial statement these things go on. Is that correct? Okay, so let's do that real quick. Rental revenue goes on what? The income statement. Insurance expense? Income statement. Service revenue? Income statement. Number 4, interest payable on a Quick Study 2.8. Interest payable goes on the balance sheet. It's a liability. Okay. Equipment. Oops, I skipped the wrong one. I'm sorry. Letter E is accounts receivable. Accounts receivable goes on the balance sheet. Salaries expense, income statement. Equipment, balance sheet. Prepaid insurance, balance sheet. Buildings, balance sheet. Interest revenue, income statement. Owner's withdrawals, statement of equity. And finally, I, on Quick Study 2.8, office supplies goes on the balance sheet. Okay? Let me put those answers up there real quick for you folks at home if you missed one. Okay? You can leave that up there while I'm talking. Now, I think I told you, I'm probably the instructor at JCCC who spends the longest amount of time on chapters 1 and 2. Okay? I talked to some of my colleagues last night, and they're already given a test over chapters 1 and 2. That's okay. My philosophy of this class is I want to get that strong foundation. Okay? I think the whole semester will go easier. Now, that being said, a question like this would be a great one for a test, as would the exercise 2.1 that we did before. So I want you guys to start both at home and here live. I want you to start thinking about, hey, it's about time for the test. Okay? Our first test is over chapters 1, chapters 2. We'll talk about that more, but I at least want you to start shifting into that gear. Now, I'm always going to give you at least 1 week's notice. Okay? But please be aware that that is coming up. And for you folks at home, I will email you all the information about your test deadlines and then the way we take tests, all that information. Okay, that will be emailed to you. Okay? All right, any questions on the ones we've gone over so far? Okay, if not, then let's do just a quick little reminder of one thing that we covered last time. Okay, now what we did is we kind of did the chapter one way for analyzing a transaction. Like in this situation, we bought office supplies for cash, $250 worth. Then what we did is we used our knowledge of debits and credits to say, how do you make cash decrease? You credit it. How do you make office supplies increase? You debit it. And then what we did is we shifted into making the journal entry. Okay? This is called making the journal entry. Now that step takes place thus before we post to the T accounts or to the ledger. And that's what this looks like, okay? Now, once again, if I ask you to make journal entries, don't do this, okay? It needs to look like that. Everybody understand the difference between those two? On the test, I'm going to ask you to make journal entries, and there's always somebody, I turn to that page in the test, and there's a bunch of T accounts. And I'm like, oh, and they miss a ton of points. This is making the journal entry. This is posting to the T accounts or to the ledger. Okay? Let's take a look at Quick Study 2.6. They wanted you to prepare journal entries for each of the following selected transactions. Okay? All right, on January 13th, Deshaun Tyler opens a landscaping company called Elegant Lawns by investing $80,000 cash, along with equipment having a $30,000 value. Okay, how would that look? Well, that would look like this. Okay, now this is the debit column. And this is the credit column. But most of the times, they're not going to be writing that each time. I'm going to write it for you this time. But just note that that is the debit column. That's the credit column. And sure enough, they indent D. Tyler Capital, correct? They also did this properly in the sense that they listed the accounts being debited first, and then the account or accounts being credited, correct? Do the total debits equal the total credits? Yes, they both equal 110,000. Okay? This little explanation right here, you don't need to do that if you don't want to. Okay? You probably should put the date though. Okay? Now, we're at the point where you guys need to start self-monitoring yourself as far as, am I getting this? If this quick study right here was, you're like, I don't have any idea how to do this, then we need to meet for office hours or go to tutoring or something, okay? Because I want this to become very familiar with you, okay? So be sure to monitor yourself as far as if you're not understanding this. B on Quick Study 2.6. On January 21, Elegant Lawns purchases office supplies on credit for $820. What does that journal entry look like? It looks like this. Okay? Office supplies is debited, thus we are increasing it since this is a debit balance account. And accounts payable is credited. AP is a credit balance account, thus we're increasing it as well, correct? Quick Study 2.6, January, or C, on January 29th, Elegant Lawns receives $8,700 cash for performing landscaping services. There is the journal entry there. We debit cash. We credit landscaping service revenue. On January 30th, D, Elegant Lawns receives $4,000 cash in advance for performing landscaping services to a customer. What do we do there? We debit cash, and then what do we credit? Unearned revenue, or you could say unearned landscaping services revenue. If you just said unearned revenue, that's fine. Okay? All right. How many of you got those? Did you guys get those? Excellent. One thing I want to point out, go back to this real quick. When you do journal entries, and are you guys some of you are using the work papers in the back perhaps? Whether you do them on your piece of paper or here, make sure you do one of two things. Either draw a line in between those journal entries, or leave a space, okay? I just want to walk around. Good, you left a space in between those. Some people shove those all up together and they look like one big convoluted journal entry, okay? Is that what you did? Okay? It's going to be a lot easier for you to study this, and it's going to be a lot easier for me to grade it on a test if you leave some space. Space those babies out so that you can see the clear separation between journal entries. Either draw a line or leave a couple empty spaces. You'll always have enough room, okay? Make sense? Good. Okay, let's go over and do the same thing on our last one, which was exercise 2.4. Is that correct? Yep. All right. Exercise 2.4. Prepare journal entries for the following transactions of a new company called Special Picks. August 1st, Madison Harris, the owner, invested $14,250 cash and $61,275 of photography equipment in the company. What does that look like? Looks like this. Let me scoot that over a little bit. Okay? Looks like that. I'm not going to put the debit and credit, but just that's always understood. Okay? Do the total of the debits equal the total of the credits? Yes. All right. Next one. August 2nd on exercise 2.4. The company paid $3,300 cash for an insurance policy covering the next 24 months. That's a situation where we debit prepaid insurance. That's an asset. And we credit or decrease cash. August the 5th, the company purchased office supplies for $2,707 cash. Office supplies is increased or debited. Cash is credited and thus decreased. August the 20th, the company received $3,250 cash and photography fees earned. They debited cash and they credited photography fees earned. And finally, on August 31st, the company paid $871 cash for August utilities. Okay? They debited utilities expense and credited cash. Okay. Some of you might have just debited utilities. Don't do that, okay? Go ahead and put utilities expense. Because if you just put utilities, I mean, that could even, for some companies, look like a revenue if you weren't clear. Or it could look like a prepaid. So I always like to have all my expense accounts say utilities expense, for example. Also, don't do this. Don't just put expense. No, put utilities expense. Okay? Let's make it as clear as we can for the reader. Some of this seems kind of picky, but it's just as easy to learn the right way as otherwise. Okay? Here's what I want you to do now. Now what we are going to do is we are going to do exercise 2.5 here in class. For you folks at home, I want you to do it. Now this is a good example of one that you should perhaps use your work papers for in the back of your textbook. What exercise 2.5 says to do is use the information in exercise 2.4. Well, I got to back up a little bit. Let's back up a little bit. Time out. Sorry, I needed to cover one thing before we do that exercise. Okay? Let's talk about this. What we're going to do for those journal entries is we are going to post them to the ledger or to the T accounts. Okay? Thus, we are going to make a T account for each one of those accounts. Cash, prepaid insurance, and so on. And we're going to post those things to the T account. You with me? Then what we're going to do is figure out the ending balance of each one of those T accounts, and we are going to prepare what is called a trial balance. Let's go to the PowerPoint. We need to talk about this before we do the exercise. What is a trial balance? Okay, a trial balance is not the same thing as a balance sheet, and it is not a financial statement that is released to the public. What it is a list of all the accounts, no matter what financial statement they are on, and what their final balance is as of that date. For instance, cash at the very bottom of the T account has a final balance of a $43.50, and it's a debit balance. Thus, we put 4350 in the debit column on the trial balance. Accounts receivable has a zero balance. Supplies has a debit 9720 balance. Okay? You do each account that way. Now, I think it's good. It's not just good. The way you want to do this is you want to list your asset accounts, then your liability accounts, then your equity accounts, then your revenue accounts, then your expense accounts. Okay? Now, when I would go do financial statement audits, the very first thing that I would do is ask for a trial balance from the client. Okay? Now, the key thing is that those bottom totals need to be equal. Okay? The total debits have to equal the total credits. If they don't, there's a mistake somewhere. Okay? If those don't equal, there is a mistake. Now, unfortunately, if they do equal, that is not a guarantee that there have been no mistakes during the period. Okay? But certainly if they do not equal, that is a guarantee that mistakes have been made. Okay? So this is the trial balance that is prepared from looking at each one of those T accounts and the increases and decreases that are shown in it, and writing the ending balance as of December 3107 into the trial balance. Also note, there's never going to be a plus or a minus sign on the trial balance. Okay? Those are all understood in regards to debits and credits. Brian.
So when we're making those journal entries, I got every single one of those right. But then I get confused when we do the debit and the credit thing, deciding which one is which.
Say the last part again. I'm not sure where your confusion is. As far as posting it, you mean?
So like on this quiz,
okay,
deciding which is debit, which is credit, I get confused.
Okay.
But when I do the journal entries, I don't miss a single one of them.
Okay. Well, usually that is it's the opposite. But going back to those journal entries, let's go back to that. Like, for instance, you might remember that the journal entry to invest stuff into a business is this, but you get the debit and credits wrong? Yeah. Okay. Let me comment on that. I'm glad you said that. The way that I teach is I do not want my students just to memorize that when somebody invests cash and equipment into a business, that this is what the journal entry is going to look like. Okay? And maybe that's what you're doing, is you just know from doing enough of these that this is how it's going to look. The way I want you to be able to reason it through your mind is this. Well, cash and photography equipment are both increased in this situation. Well, how do I increase cash? Cash is a debit balance account. Thus, it increases when I debit it. Thus, I need to debit it. Same thing with photography equipment. If I want to show the increase that occurs in this transaction, I need to debit it. Well, what about capital? Does capital go up or down? Well, we talked about from the very first lectures that investing assets into a business by the owner is one of those things that makes capital go up. Well, how do I make capital increase in my journal entry? It is a credit balance account, thus I want to credit it. Okay? Now, the reason I want you to do that is you might be able to just do that simple memorization for a while of what the very limited journal entries we're doing look like, but it's going to get to the point where that's going to be too difficult. What I would recommend for you, or for anybody who's having that trouble, is to go ahead and do it this slow way. What's the chapter 1 way? List the accounts being affected. What do? They increase or decrease by how much? Then, how do you make that account do that? Using our knowledge of debits and credits, how do you make cash decrease? You credit it. How do you make office supplies increase? You debit it. Then do your journal entry. You'll be very glad if you train your brain to work through journal entries that way. Don't just do a trite memorization of it. Okay? Does that help at all, Brian? That's a long answer to a short question.
I understand. I just don't. I don't have it memorized. It's just that I know that cash is like for that first entry, whatever.
Yeah.
I know that cash is going to increase. I know that when you increase cash, that's debit.
Yeah.
and equipment or whatever. I know that's going to increase, and I know that's a debit. And I know to equal that, you have to have something that's taken away from it.
Yeah.
Credit.
What I would say is this. I think you're closer than you think you are. But have you done your flashcards? Oh! Gotcha.
You said that someone was going to be able to show me, because I don't know what we're supposed to really do for this.
Oh, let me see.
For the flashcards?
Yeah.
Who has their flashcards? Okay. Show them your flashcards. You got some right here. Okay. Oh, these are all. I look out and I see all this sea of flashcards. Okay. That is the way you learn these account balances. Okay. Is write them there, mix them up. When you have a few minutes, just go through them. I want you to know those balances like you know your middle name. Okay.
Where did you get all these?
Where do you get index cards? I don't know. Where do you get index cards these days?
I got mine out of my little sister's backpack.
Get them out of Lauren's little sister's backpack, okay? Just tell them where you live after class. No. Just get some index cards or cut up little pieces of paper or whatever you got to do, okay?
I know where to get index cards.
I know. I'm just giving you crap.
Jeez.
I know. So what is your question? Where do you get the accounts?
Yeah, where do you...
On that one sheet I gave you. Does anybody have that? They can show them real quick. Look, there, look at Lucas right there. Yeah.
Why is that credited?
Why is that credited? Attorney fees earned. Which one are we talking about here?
It just wasn't on the list of the other ones. I wasn't sure why would be credited.
Okay, but real quickly, is it quick study 2.6 or exercise 2.4?
Quiz.
Quiz.
Oh, the quiz.
Quiz
Okay,
4.
sorry. Attorney fees earned. Whenever you see something earned, that's just a revenue account. And all revenue accounts are credit balances account. You could call that attorney fees revenue or attorney fees earned. It's the same thing.
So it earns revenue.
Exactly. If it says something earned, that's a revenue account. All revenues are credit balance accounts. Very good question. Very good question. Okay? Does that help that list, though? Okay. I just give you trouble. Okay? All right. Any other questions? Here's what I want to do then. Go to exercise 2.4, which is right there, and I want to do exercise 2.5. I want you to open up a T account for each one of these accounts, and if you use your work papers, you should already have this in the back of your book, and I want you to post these. Now, here's the way you post these to the T accounts or to the ledger. You go line by line. Go to the debit T account. Go to the cash T account, and on the debit side, put $14,250. Then go to photography equipment. On the debit side, put $61,275. Then go to the capital account on the credit side and put that. Do it line by line. Well, how else would you do it, Krug? Well, some people try to say, okay, I'm going to do all the cashes first, and then I'm going to do all the equipments first. They always miss one when they do it like that. Okay? So, just get a piece of paper, go line by line, and post those to the T accounts, and then look at the ending balance and prepare a quick little trial balance. All right? Lauren, you have a question?
Well, the book, I was doing it that way, and then the book says that, like, you're just supposed to make one for cash and then, like, make a longer T account and just put all the different instances of cash. And
Well,
then put the
maybe, I just think if you try to do all the caches and then all the equipments, you're going to end up missing one. Whereas if you go this line by line, you're going to make sure every one of them is covered. Now, ultimately, you can do it how you want. This is just the way that I like to do it. So, all right, so we're going to play that music for you at home, and we are going to take some time to post these to T accounts and then to prepare a trial balance. All right? Let's go ahead and do that. Okay, let's go back. You may not be done, and that's okay if you're not. This is always a little bit challenging because this is kind of the first time that we're starting to do the whole process. Okay? So let me reiterate a few things and show you the answers, okay? Let's see here. What we had up here first was the journal entries, okay? Now what I want you to do is only for the accounts here, you open T accounts for these accounts. Now every company is going to have a different set of accounts, okay? So when you went over to the PowerPoint, there's some accounts up here that will not be in your T accounts. That's fine. Don't make T accounts for those. Just make T accounts for the accounts that you are considering in that specific exercise. Okay? So you'll debit cash for $14,250, then debit photography equipment for $61275, and so on. Okay, let me show you what those T accounts look like. Okay? Those T accounts look like this. Okay? Now, this is a pretty easy one in the sense that all of these accounts except for cash, there's only one thing happening to it. So somebody might even say, why do we need to do this T account thing? Can't we just cut to the chase and do the trial balance? No, because most of the times these will have a lot of increases and decreases in them. And how else would you figure out what the ending balance is? Okay? For instance, cash has an ending balance of $10,622, and I highlighted that in yellow. How did I get that? I added the debits, subtracted the credits. There was a net debit thus of $10,622. Okay? So you only put one number for cash on the TB. Don't total these up and put it in the debit column. Don't total these up and put it in the credit column. Okay, there's only one number. Now, these are all real easy because like I said, there's only one thing happening. Keep in mind, all accounts are debited and credited both, regardless of whether they're a normal debit or credit balance account. We just need to know whether the debit and the credit are increasing or decreasing them. Okay? So now we have our ending balance for all these accounts, and we prepare a trial balance. Okay? The trial balance looks like this. Now, somebody asked, I don't understand what this trial balance is for, why we do it. Okay, and I wasn't as clear as I should have been. The trial balance is prepared first to make sure it balances, to make sure the debits in total equal the credits. And then we use this to prepare the financial statements. Let me say that again. The trial balance is what we prepare to help us prepare the financial statements. That's why you want to list your assets first, then your liabilities, then your equity, then your revenues, and then your expenses. Because this is what you utilize to prepare the income statement, and then the statement of equity, and then the balance sheet. Okay? Does this make sense? Total debits equal to total credits. Make sure you head this up appropriately. Now you might have said, well, I guess I got the answer there, but I'm still a little fuzzy on it. I understand. What I want you to do for homework is this, but I need to give you one special set of instructions for your homework. Here's your homework. I want you to do exercise 2.6 and exercise 2.7. Now listen carefully, folks at home and folks here. Exercise 2.6 is going to tell you to take these transactions and analyze them and take them straight to the T account without doing the journal entries. I want you to do the journal entries first. Then do your trial balances and post the journal entries to the trial balance or to the ledger. And then exercise 2.7 is to prepare a trial balance from those T accounts. Does this make sense?
Okay, so we're making journal entries, then we're going to make
Do your journal entries first, Then post to your T accounts. Remember, those are in your worksheets in the back of your book. And then do your trial balance. Does this make sense? Okay, let's do a real good job. That's all I'm going to give you this time. But I want you to really work hard on that. Read your textbook. If any of these concepts are funny, it can give you some more help. The order again on the trial balance is assets, liabilities, equity, revenues, expenses. Okay? All right, thanks, guys. We went a minute or two long. See you later.